Greetings, everyone, and welcome to the Business Ownership Workshop Series sponsored by Willow Creek Community Church Employment Services Team. My name is Mike Waller. I'm going to be your host for tonight's Part 4 session of a four-part series that deals with the entire subject matter of what it might mean to be a business owner or have a business of your own. Tonight's session, we're going to actually talk specifically about some of the administrative details associated with getting your business set up. But we're going to really focus on what the steps are that allow you to start your business in the state of Illinois. However, this really does apply to almost any state, so it's not specifically restricted to the state of Illinois. This is what the four parts of this series have looked like. The first session, we covered off what it really means to be a business owner, some things to give consideration to. Perhaps you have made a selection of a business, perhaps you're thinking about an idea, perhaps you have no clue. Part 1, if you have not listened to it yet, will give you a lot of detail that might be helpful to you in that part of the process. Secondly, in Part 2, we covered off the business plan and the marketing strategy and the importance of having those put together in anticipation of what your business might actually look like. The story of your business, as I commonly refer to it. Step 3, or Part 3, was covered via the marketing plan. We took it apart in a little bit of detail for you and tried to give you some information and some strategies that might be helpful to you to create a marketing plan for yourself. And as I already mentioned, Part 4, today's session, we're going to be talking about what it means to start your business in Illinois and deal with some of the administrative processes. So let's jump right into it. Willow Creek Community Church is a non-denominational Bible-believing church in South Barrington, Illinois. We subscribe to the teachings of Jesus in the scriptures, and I personally have found a lot of wisdom in the book of Proverbs, and so I've used a quote from the book of Proverbs to start each one of the sessions here that we've been going through. This is a quote from Proverbs 16, verse 20, where it says, "Whoever gives heed to instruction prospers, and blessed is he who trusts in the Lord." I have found that from my life's experiences, if I would have learned about the book of Proverbs a long time ago, I probably would not have made some of the mistakes that I've made in my life, battle scars, as we often call them. I just encourage you to perhaps read into the book of Proverbs and learn a little bit that might be helpful to you, because it always also speaks to the subject matter of having advisors and counselors around you to give you guidance and direction in areas that may not be your strength area or your comfort zone necessarily. In case you've got any unanswered questions from the other parts of this series, I'm going to actually provide you a set of contact information for myself if you wanted to reach out to me to ask a question or make an inquiry of some sorts. I'd be more than happy to entertain that. So that'll be provided to you as we get to the end of this presentation. So a little bit of a review of what we covered last week. I talked a little bit about what a marketing plan is. In its simplest form, it is nothing more than just how does a buyer and a seller get connected. That's the whole spirit of what a marketing plan is about, but there are a lot of parts and pieces to that. Some of the ingredients that need to go into your plan are broken down into 4 significant elements. One is description of what are the products or services that you have to offer. How are you pricing? How are you planning on demonstrating your value in your product? Second, the market analysis. It's important that you take the time to do some discovery about the trends that are going on related to your industry. I've used a thread throughout this whole series of the elder care or care services business because I think it's something many people can relate to, but there's some strong market dynamics that are driving why that's a very, very good business to be in these days. And it has to do with the fact that 10,000 people are turning 65 every single day. And between now and 2030, there will be upwards to an accumulation of about 75 million people over the age of 65, many of which are going to need care services as they get into the senior years of their life. That's the kind of a market analysis element that needs to go into looking at the business that you might be thinking of. Thirdly, we talk specifically about marketing objectives and having goals and tactics and specifics as to how you are going to attack the marketplace. Then fourthly, everything always gets down to money. And it would be wonderful if we all had unlimited resources financially to be able to spend as much money as we wanted to on the whole arena of marketing and getting our business going, but that's not reality. You need to have a budget and you need to have some controls on that budget as to how you're going to manage the process so that whatever you're going to be doing as it relates to creating awareness about your product and or your service and or your company, it's going to need to be driven by the amount of money that you have to spend on advertising and promotion of some sorts. Over the course of this series, I've talked about some of the keys to business success. In the second session and the business plan and the marketing strategy, talked a bit about the importance of having a vision for what your business is all about. A business plan that details out all the elements of your business and the story of how your business is going to get established and how you're going to make it a successful business. What is the value proposition that you have to offer? This is critically important because this is what, well, really establishes a business. It's a determination of, does it provide value in the form of a service or a product to someone else that they're willing to spend money on? That marketing strategy, again, is critical. That marketing plan, again, is the detailed roadmap of how you're going to get the message out, how you're going to evangelize about your business. Tonight, we're going to cover off what's covered off in hit yellow printing here. We're going to talk a little bit about working capital and the financing options you might have. Some of what I call the administrative stuff, establishment of your legal entity, insuring your business, managing payroll, et cetera, et cetera. We're going to cover off some of those things. I'm going to talk a little bit about a concept called working on your business and not just working in your business. Then we're going to wrap up with really what it takes to make a business successful, and that is just commitment and perseverance. At the end of the day, starting a business is not easy, and it takes a lot of energy, it takes a lot of effort, it takes money to get going. You have to be committed, you have to be prepared to stay the course. And that's the importance of a business plan that affirms the fact that you've got a strategy, you've got a plan for how you're going to make it successful. And again, we'll wrap up with the 12 steps to starting your business, again, in the state of Illinois, or again, virtually any state you're going to be in. One of the things I've spoken to you about in a number of different ways over the course of this 4-part series is the importance of the sales engine. As an owner of a business, it's the most important role that you have. You have to drive that sales engine. That may mean that you are the salesperson or the generator of activity, or it may mean that you hire somebody, if that's not your expertise, who does have expertise in the area of sales. It will depend upon what's the model of the business that you're going to be in. And whether it's a product-based business where people come to you, perhaps in a retail establishment, or it's a service business where you go to people in their homes or their businesses. But again, at the end of the day, no sales, no business. I've said this numerous different times that if you don't have a business that becomes profitable for you at some point in time, you don't have a business, you have a hobby. And if you can afford a hobby, that's wonderful, but it could be an expensive hobby if you're not careful. So here's this concept of what it means to work in your business versus on your business. If you're a good pie baker, you might think that everything surrounds the fact that you have great recipes, you have a great skill for baking pies, and you start a business and you find out that running a business is very, very different than baking pies. It takes a lot of energy and it takes a lot of different kind of a focus. A truly successful business owner learns that working on the business, meaning how do I manage and grow the pieces of the business pie? How do you document recipes? How do you train people? How do you focus on the things that count? Marketing and driving the sales engine of the business. There's a book that was written by an individual by the name of Michael Gerber, who carries this theme through his book called The E-Myth, Entrepreneurial Myth. And the focus of the book is, again, all about what his experience as a consultant to the small business ownership arena has proven to him that the people who have the most successful businesses are those that learn to focus on working on their business and not just working in their business. Not unusual in the very beginning of any business that you're going to work in it, but if that's going to be your focus, if you become so enamored, this is where passions can get you into trouble. If you're so enamored with baking pies, you love fishing, you love tennis, you love golf, you love some kind of an activity, whatever it might be, and you think you can make a business out of that, it may or may not be successful, but you may enjoy doing it. But that's not what makes for a successful business necessarily. It's all about focusing on how do I scale and grow the business that will create the kind of success story that most business owners are looking for. Again, you can pick the book up on Amazon, or you can actually pick it up from the library. It's available in both audio form as well as in print form. Relatively inexpensive, probably a $15, $20 book, something to that effect. So let's talk a little bit about financing options. It's a subject that comes up all the time. It takes money to start a business. You have to have some measure of working capital. That'll be dependent upon what the nature of your business is. That's the importance of putting your business plan together so that you can make the determination as to whether or not, A, you have a business, number one. Number two, what the operational cost to get it started is going to be, because that's a part of the financial pro forma that you'll put together. But just have to remind people, there is no such thing as free money. We would all love to have an opportunity to get cash by winning the lottery or some means like that. Not normal. It doesn't typically happen that way. Let me highlight a few potential options. Some of these you may be aware of. They're pretty obvious. Some of them you may not be. The first one, self. You may be in a position where you've been able to set aside enough resources in the form of savings of some sorts that you can self-fund your business. It depends on what the size and scope of your business is going to be. If you're talking about $5,000 to start a very, very small business, or maybe you're talking about a brick and mortar type of an operation, it's going to need working capital of $100,000 to $150,000. You may be in a position to write a check for that. That's wonderful. Not everybody is. Many times people have set aside money in savings or some kind of an asset that can be converted into cash that can be used for the working capital to start that business. The most common place that people think of is to go to a bank. What do banks do? They take in money for deposits and they lend it back out with interest. That's how banks make a profit. Banks are the natural place that most people would think of to go to. You would typically go to a loan officer, bring them your business plan, explain your story, convince them that you're a good liability risk, and they may or may not decide that they can, well, do a loan for you. But you can expect that even in whatever the situation might be, the bank's going to expect you to come in with anywhere from 10 to 30% of cash in for what the total working capital is going to be needed to get the business off the ground in the first year. And so, again, what's going to drive that percentage is going to be how good your credit rating is. So the higher your credit score, the lower interest rate that you're typically going to get. And also it's going to mean the least amount of cash you have to put in. Banks are conservative by nature. There's a program that's offered through the federal government called the Small Business Administration Guaranteed Loan Program. SBA Guaranteed Loan is commonly referred to. All banks are the administrators of the SBA loan guarantee application process. Every year, the federal government sets aside somewhere in the neighborhood of $25 to $30 billion, that's with a B, that can be used for business development in our country. And it involves loaning anywhere from $50,000 up to $10 million through that loan guarantee program. The way it works is you make your application through the local bank, and the bank can be a large institution such as Chase, Wells Fargo, B of A, or it can be a neighborhood bank, a community bank, or it can be a regional bank somewhere in between. All banks can do SBA guaranteed loan applications. And so that's where the administrative process starts. A bank might say to you, okay, you need $100,000 to start your business. Well, we think that you're a little bit higher risk, so we're going to, well, say you need to have about $30,000 in cash to put into this investment because you need 100 overall. We're not going to give you 100, but if you've got 30 to put in, we'll look at loaning you 70. Well, they may say, okay, we're concerned about the risk here. We think that you would be better off applying for a loan guarantee from the federal government in the form of an SBA guaranteed loan. That's the way the bank administers the risk side of things. So in a particular instance where I said you have $100,000, you have 30 to put in, you got 70 that you're going to get from the bank may say, we'll take a risk on 20% of that. So they'll take a risk on $14,000. They're going to make an application to the SBA and say, government, will you guarantee the $56,000 or the balance of whatever might be left in the event that the loan goes south? That's the way the SBA loan guarantee program works. They have several different kinds of loans. They have what they call an express loan, which is typically up to $150,000 with a minimal amount of documentation, all the way up to maybe a $10 million loan that would be backed by some kind of assets, real estate or equipment or some other type of asset. Another alternative is for those that are comfortable and potentially have the availability of a home that has home equity in it. You can get a line of credit or you can get a home equity loan against that equity that you have in your home. Again, that's a very philosophical determination as to people making the decision to use their home as equity. Some people would say, nope, no way I'm going to put the home up at risk for doing a business. Other people would say, hey, we've got a lot of equity in our home. We're willing to take a risk, and maybe it only involves a 10% risk against the house. Friends and family. This is where you find out whether your friends like you and your family loves you. If they're willing to give you some money, that's a pretty good indicator that you have a great relationship with them. They can be a source of investment money for a new business starting up. There's another category of loan called microloans, and there's an organization called Accion.com, ACCION.com, that typically does loans under 50,000. But here's the caveat: they typically do them for people who don't have as good a credit, and they charge substantially higher interest rates. If you got a loan from a commercial bank in today's climate, you might be looking at a 7 to 10% kind of a loan. If you looked at a micro loan, you might be looking at a 12 to 15 to 18% kind of a loan, more of along the lines of a credit card. Then there's a category called unsecured loans, which a number of years ago, there used to be quite a number of those that were being written by the banks, but they kind of got away from it. And typically an unsecured loan simply means what it says. You don't have to secure it with any kind of an asset, a home, a car, stocks, or any kind of an asset that they could potentially sell to make the loan good. And so unsecured loans, today you might be able to get one anywhere from $1,000 to $5,000, depending upon your credit rating and depending on what kind of relationship you have with a banking institution. That's another option for you. Here's another category that I've highlighted: 401k or IRA rollover. It's called a ROBS. And it's a way of taking funds that you may have tied up in a 401k or an IRA that if you're under the age of 59 and a half, if you pull those out, you would have to pay a 10% penalty unless there was some kind of a medical emergency or some situation like that that dictated the removal of it. And you have to pay that 10% penalty to the IRA for the privilege of doing that. However, there is an alternative means by which you can actually take money out, use it to establish a new business as an alternative investment vehicle for your 401k or your IRA, and you don't have to pay the 10% penalty. Again, it's not something you're going to do on your own. If that was something you had an interest in, please let me know, and I'll be more than happy to connect you with some folks that can explain it to you in great detail. Grants. Everybody says, gee, I'd love to get a grant. Can't I get a grant because? Well, grants are hard to get. If you have some kind of a product or service for which an agency of the federal government or the state government may be willing to grant a loan of some sorts, or just a outright grant. It's not going to happen if you're going to open a Subway shop, a donut shop, a muffler shop, an auto repair place, whatever. They're not going to give you a grant for that typically. But again, if there is some interest in the area of grants, I suggest that you get in touch with the local Small Business Development Center at the local community college, the closest to you, and talk with their folks there about grant programs that they may be aware of that potentially you can qualify for. And then there's a wild card category called crowdfunding. If that phrase does not mean anything to you, I suggest that you Google it and find out a little bit about crowdfunding. Essentially, it's a way to raise money. If you become familiar with some of the listings that have come out on Instagram and Facebook over the course of time that have been done by GoFundMe, Indiegogo, a few other crowdfunding sources, if you will, that help people put together the crowdfunding program, that could be a way for you to potentially raise some money also. So these are just some ideas, and that's the reason why I throw them out there. Again, if you had a particular interest in any of them and didn't really have a high degree of familiarity with it, you can Google it, or you can give me a call. I'll be happy to talk about it in some more detail. So what's the preparation process? Know and protect and improve your credit score. There's an organization called creditkarma.com, which is a free service that's offered to give you a couple of your credit scores. It will give you an indicator. Credit scores are kind of a mysterious arena as to how do banks and lending institutions use the credit score and what kind of a credit score. FICO is the term is commonly referred to, but there are some variations of what FICO really means depending upon the credit agency itself. So anyway, you need to have a good understanding of what your credit score is. Number two, you need to have a business plan that has a compelling story and that you can be that evangelist and you can communicate to a lending institution why your idea is an awesome idea and why they should loan you money for it. You're going to need a personal financial statement. They're going to want to see, what are the assets and what are the liabilities that you currently have. And without a doubt, you're going to have to know your numbers inside and out. I'm not saying you got to be a CPA or a financial officer or someone like that, but you got to have a good understanding of numbers make a business function, from the revenue side, from the expense side, and that thing called profit and or loss. But this is what you're going to need to know. You're going to need to know what your startup costs are going to be for the business. You're going to need to be able to estimate your first year's business expenses. And you're going to have to estimate what kind of working capital cash requirements am I going to need to stay solvent. You can have a profitable business, but be cash poor. If you don't understand what that means, I'll be more than happy to share that with you in a little bit more detail individually. You got to get to break-even point. That's the key turning point. The first pillar that you have a successful business. If you can get to the point where your revenues are covering all the expenses that you have on a monthly basis, then that's break-even point. Hopefully beyond that point, you're able to start take some money out of the business or make some money in the business. So again, the last thing you're going to need to know from a financing standpoint, the amount of money that you can invest and the amount of money that you're going to need to borrow. And then finally, those pro forma financial statements, which we talked about in the business plan, that's vitally important if you're going to have to go to a lending institution in order to try to secure funding for your business. So now let's talk about some important administrative details. Business structure, what's commonly referred to as your legal entity. There are three options that are typically available to you. There's something that is called a corporation. There's something called a subchapter S corporation, and then something called a limited liability company. Those are the three most common legal entities. There is another category called a sole proprietorship, commonly referred to as an assumed name, that does not provide the protections for you that a legal entity of a C Corp, S Corp, or an LLC does. Why is this legal entity so important? Well, you've got a couple of things significantly at stake. You've got your business and making that successful, and then you've got your personal life. You want to put a firewall between those two so that in the event that your business is not successful, that you may end up bankrupting the business, but you don't have to bankrupt yourself in order to get out of your business. So let me talk a little bit about some of those liabilities and what they mean. And again, this is critically important from the standpoint of protecting yourself. Sole proprietorships do not provide that measure of protection. You can be sued personally. We live in a very litigious society. We can't be naive about that. People sue for the strangest reasons. The biggest danger in a lawsuit is not necessarily the judgment, it's the legal fees that it takes you to fight the case. Lawyers make anywhere from $200 to $500 an hour to defend their clientele. And again, that's what the cost of it might be. So here's some of the options and what they mean. A C corporation, you probably heard of corporation term, that term previously. It simply means that the corporation is a legal entity in and of itself. It's a living organism, if you will. It has tax liabilities in and of itself. A corporation has shareholders in it. It may be 2 shareholders or it may be 200 shareholders. A corporation simply disperses the profits or the loss from the business or retains earnings into the business. And it does that through dividends or distributions of some sorts. A corporation gives you the protection of that firewall. If you would be sued for some reason, you might have to bankrupt your corporation. But here's one of the downsides of a corporation. The corporation entity itself is taxed as an entity. Whatever distributions it makes in the form of wages or dividends or any sort of a distribution to the individuals who are receiving that from the corporation are then taxed through their 1040 individual tax filing. So commonly referred to as double taxation, which it really is. But there are some pros and some cons to doing that. Depends on what the tax rates are. In relatively recent times, the tax law was changed in 2017, which reduced corporate taxes down to about 22% from about 38%, made it attractive for people to go into a corporation as an entity. Another alternative is called a subchapter S corporation. It's a derivative of a corporation, but here's the difference. It requires that every year all the profit and loss out of the business is distributed amongst the partners in the business. And taxes are then paid by those individuals based upon whatever their tax status might be. A limited liability company works somewhat similar to that. The setup of each of these is a little bit different. And so a limited liability company gives you, again, all the protections. It's very simple to set up. And it requires, again, that all the profit and loss comes out of the business every single year and distributed amongst the partners to the business, depending upon what percentage of ownership that they have. Now, this may sound a little bit complicated to you, and this is the reason why there are lawyers and there are CPAs. I encourage anybody who is going to set up their legal entity to have a consultation with a CPA and get good tax advice, because each of these has different tax implications depending upon your tax situation. Do everything you can to avoid paying taxes. Pay what you're liable for, but have someone who works in that arena every day help you to determine what's the best tax situation and best legal entity for you. Many attorneys can do the very same thing. How can you go about setting up this legal entity? Well, number one, you can do it yourself. You can go to the cyberdriveillinois.com website, and they will have the instructions out there for how you can actually set up the legal entity for your business. If you're comfortable going through legal terms and legal language and creating articles of incorporation, or you can hire a CPA who can give you the tax advice and may actually help you to set up the entity with the state that you're in, state of Illinois in this case. Or you can go to an attorney. Attorneys are not cheap. There are several approaches to that. You can go to a family attorney, a business attorney, any attorney that's licensed to do business in the state in which you're going to set up your business. That's one alternative. Or you can go to the internet. You can go to the virtual attorneys. You can go to a number of different entities out there that will actually help you to set up your business virtually. And so there are some other alternatives out there. You can do some research on Google and determine who some of those entities might be that can actually help you set it up virtually. It'll be cheaper than having a local attorney do it for you. But whatever you do, again, make sure that you do it under the advice of counsel, because it can be a little bit tricky area. Like I said, there are some benefits to how you set it up. Personally, our businesses have been set up as LLCs. And we file a subchapter S corporation because it allows us to reduce the amount of tax we pay. And I'll talk a little bit about why that's important to you in just a moment. As a part of that setup process, you're going to get what's called a federal tax ID. Now, in the case of a sole proprietorship, you will get a registration number, and that process is handled through the county clerk. If you want to set up a sole proprietorship, you need to contact the county clerk of the county in which you're going to set up your business, and they'll walk through the process with you for creating a sole proprietorship identification number. However, if you're going to set up as a corporation or a limited liability company, then you're going to need a federal tax ID, commonly referred to as an EIN, and you will be then registered as an entity with the federal government and with the state government. That's the equivalent of a social security number for your business. If you sell product in the state of Illinois, and this changes depending on what state you're in, you may need a state sales tax ID. In the state of Illinois, you do, because you're going to collect the state sales tax and file it with the state government on a periodic basis that will be determined when you set up that state sales tax ID number. That's gotten through the Illinois Department of Revenue. There may be compliance issues, rules and regulations that you have to follow. It depends on what the nature of your business is. My advice is simply go to the county in which you're going to establish your business and say, I'm going to set up this kind of a business. What kind of licenses do I need? They'll be able to give you counsel. You may want to do the same thing at the village level or the community level in which you live, as well as at the state level. Again, things that have to do with public safety, such as certain trades, such as electricians, plumbers, etc., are all licensed positions. And likewise, anything having to do with food safety is a very, very important consideration. There are a lot of rules associated with complying depending upon what kind of food you're going to prepare in, and you may have to be preparing it in a commercial kitchen that is monitored by health regulators. So again, you want to just check and make sure that you're going to be street legal. People do fly under the radar on some of these kind of things. I do not recommend it because somewhere along the line, it'll probably catch up with you. Payroll taxes and insurance. Payroll taxes, again, if you're going to have employees, then you may want to use a payroll service such as ADP, Paychecks. Intuit offers a payroll service. Those are all entities that have their businesses built around helping people to do their payroll taxes on whatever frequency you're going to make pay to your employees, and they will actually file the payments to the state and the federal government for you. There's some real benefit to doing that, and it simplifies the process dramatically. Insurance, I wanted to make a comment about that, and that is the fact that having an insurance broker as an advisor is an important person. You need to make sure you have the right kind of insurance for your business, depending upon what the nature of it is. And that will vary anywhere from general liability insurance to errors and omissions insurance to automobile insurance. Whatever the nature of your business is will dictate the kind of insurance you need. Why do I recommend a broker versus a direct writer? Direct writers write for a specific company, such as Allstate, State Farm, Farmers, etc. Brokers typically deal with 7 to 8 AAA rated companies, but they can shop it for you and they can find the best deal for you for the most amount of coverage. That's the reason why I recommend having an insurance broker as one of your advisors. And then this last category of proper business record keeping. QuickBooks is one of the most commonly used pieces of software that people use to track everything associated with the operation of their business, everything from a revenue standpoint to an expense standpoint, as well as all the assets that might be a part of that business. And so anyway, those are some key administrative details. I want to back up here and just go back to this business structure and say why this is so important to you. Again, number one, it's about your legal protection, making sure that you are well protected. Number two, making sure you minimize the amount of taxes. I am set up as an LLC, file as a subchapter S because it saves me money on self-employment tax. As a LLC and a subchapter S, you are required to pay self-employment tax. And that simply means that you are the employer and the employee. If you're working for somebody else or have worked for someone else, you will note that they take out 7.65% for a combination of Social Security and Medicare contribution. Your employer matches that for a total of 15.3%. As a business owner, you are responsible for the 15.3% because you're both sides, your employer and employee for your company. There are some ways to minimize that amount of self-employment tax. It's something you need to talk with a CPA about. It may affect how you file your taxes or how you set up your legal entity. So we're going to do a quick review, and this is what I refer to as the 12-step program. This is all 12 steps here outlined in number 1 through 12. I'm going to go through them in just a little bit of detail with the commentary. Step number 1, codify your why and your expectations. If you don't understand what I just commented about starting with why or your expectations, go back and listen to part 1 of this series, and you'll hear a little bit more detail about the importance of how you go about the process of understanding what your expectations are for the performance of your business and why you're doing your business. Be able to codify that, write it down, spell it out. Step number 2, choose your idea or your franchise. Maybe you're there already. Maybe you've got the idea, but maybe you don't. Or maybe, well, you're thinking about going the franchise route. However you go about making that choice, and again, this is what I make my living doing and have done for the last 21 years, is helping people to go through the process of analyzing the franchise world. That's my particular area of expertise, but know a lot about small businesses in and of themselves. Again, that's the second step. The third step is to write that business plan. This is the story of your business. It's going to be time well invested because it's better to spend the time writing a business plan and really doing the hard work and the heavy lifting of determining whether or not you truly have a business that's going to produce the results you're looking for. It's a lot cheaper to do it that way than it is to just jump into the business with no specific business plan and hoping for the best. It ought to be that point at which you either say stop, go, or caution. You need to think about it further. Step number 4, name your business and choose your legal entity. On the cyberdriveillinois.com website, there's a search engine out there that would actually let you go out and search the name that you may have in mind for your business to see whether or not there is anyone else that's using that name. The last thing you want to do is get into a situation where you're using a name that has legal protections associated with it through copyrights, trademarks, or prior registration with the state of Illinois or the state you're doing business in. Step number 5, get those federal and state and tax IDs. Again, this typically will happen at the same time that you're going to be setting up your legal entity. Step number 6, again, register your business with the state of Illinois. That's done through the Secretary of State. And again, it's going to be probably pretty much the same process no matter what state you're in. Step number 7, Select your business location. Are you going to work from home? Is that going to be a home-based business? Are you going to have a brick and mortar location in a low-rise industrial area? Are you going to be in a retail establishment, a strip mall of some sorts? Figure out how you're going to fund your business. What's going to be the means by which you're going to have enough working capital? One of the points that I made in the first session, first or second session, I talked about the reality of the fact that 1 in 5 businesses that are started completely from scratch, not a franchise, started from scratch, typically fail within the first year. A third of them fail by the end of the second year. 50% plus of them fail by the end of year 5. You want to make sure that you've got the kind of working capital to stay the course. So it's important to put that business plan together and make sure that you do have the right kind of funding in place to support what it's going to take to get the business started. Step number 8, then you can open up your business account. You will not be able to set up a bank account unless you have number one, a sole proprietorship identification number obtained from the county in which you're going to set up your business, or that you have set up a S Corp, C Corp, or a limited liability company for which you will have a set of documents that articles of incorporation are commonly referred to that you will have to present to the bank in order to set up your business bank account. Step number 9, and by the way, I do highly recommend to you that you set up a credit card account for your business also and keep it completely separate from your personal accounts. Step number 9, apply for licenses and permits. Again, this is the reason for checking with the state, the county, and your local village to make sure that you're properly licensed to do business so that you don't get an unexpected visit from somebody from the government. Step number 10, hire employees as necessary. Depends on whether you're going to have them in the beginning. Step number 11, obtain that business insurance. It's going to be vital to protecting you. You want their lawyers to protect you in the event of any kind of a lawsuit. Then step number 12, you set up that accounting system so that you'll be able to have a bookkeeping system that will allow you to keep track of the profit and loss of your business by posting of revenues as well as posting of expenses. And so again, as I mentioned earlier, QuickBooks is a relatively inexpensive piece of software that can be run in the cloud or run on your computer that will give you the capability to track all the information associated with the P&L operation of your business. And then where does that lead you? You get to that place called grand opening, and that's going to mean different things to different people depending on what the nature of their business is, but that's the exciting time. So as I said earlier, be ready to make a long-term commitment, financially, emotionally, have the family support. Got to have everybody on board with you because it can be stressful on your family in the early days of starting a business. And then just plan to work hard, particularly in the first few years. My contact information is right here. Again, if you'd like a copy of this presentation, you can reach out to me by any of these numbers. You can text me on my cell. You can call me in my office or on my cell, or you can email to me, and I'll be more than happy to send you a copy of this presentation. So that's it. This is the wrap up of the 4-part series. Hope that you've been able to gather some nuggets from it that have been helpful to you. Feel free to go back, and you'll be able to go back to the Willow Creek Job Connection website and be able to review the entirety of all 4 parts of this series. Thanks again. We appreciate you being here, and do well with your business and have a great success story.